So in studio today, I have Pierre from PPS. How are you doing?
Fine, thanks yourself.
Good. So let's get straight into it. What does PPS stand for?
Thank you very much. Well, PPS is a common misconception or a confusion out there that I find with the students when I do their presentations that they think we're PPC. Just want to clarify that PPC makes cement. We don't make cement. PPS stands for the Professional Provident Society. So in short, we're a society of professional people in South Africa. I'll explain a little bit later what we see as a professional person. And if you go look up in the dictionary, the provident part of the name actually means making provision for yourself financially for the future. So it's a society of professional people in South Africa making provision for their financial future. And in short, we call ourselves PPS.
Okay, so what services does PPS provide?
Well, it's that dreaded thing that no one likes to talk about. It's insurance. So we call it a grudge expenditure. It's something you spend money onto, but you don't see anything back in your hands. So we don't like talking about it. We don't like thinking about it or anything like that. So yes, we are a financial services provider. Those awful words. It's an insurance company, but it sets us apart in the form of exclusivity and mutuality, which we'll touch on a little bit later as well. So what we do, the services we provide is, first and foremost, it's long-term insurance. Now, long-term insurance means it's insurance for you as a person. Insurance of your life, your earning abilities. Should anything happen to you, we cover you. Basically what any insurance company does. But like I said, I'll explain a little bit later what sets us apart. So that's the first thing and the most important thing. When you can't look after yourself, we look after you for you. And of course your loved ones. Then we also offer short-term insurance. Short-term insurance is all the things that's not pertaining to you as a person. So that's assets, that's your car. And because we're professional, we also have our insurance of boats and planes and islands or anything exotic like that. But that's the things that you can easily actually replace. Then next, also very important, and I urge people to look on the website and go and look profmed.co.za. Profmed is our medical aid of PPS, so it's also medical aid for professional people. Very good medical aid and competing with the best out there in South Africa. And then last, and if you're not too keen on the insurance thing, also investments. So there's an investment platform like the companies out there, the names we all know, the Coronation, Alan Gray, Investec, companies like that. So we also do insurance for you. Investment.
Okay, so why should graduates choose PPS?
Well, there's a main difference, or the one thing that I mentioned that sets us apart. It's obviously, firstly, it's exclusive. It's for professional people only. Professional people we see as someone with a 4-year qualification and up. And then the concept of mutuality, which I'll explain a little bit later in more detail. But mutuality basically means the members own the company. And we're the only company in South Africa, not only the only financial company in South Africa, but the only company to do that, to offer that to the clients or to the members. So when you are a member and you pay your premiums, you actually buy into the company, you buy shares into the company. And I'll explain what happens to that shares a bit later.
So who can join PPS?
As I mentioned, it's for professional people. So what we see, or what we deem as professional qualification, is someone with a 4-year degree and up, or a 4-year qualification and up. So that basically is, I think over half of our members are doctors and specialists. Also architects, engineers, CAs, lawyers, vets, dentists, anyone with a 4-year degree and higher qualifies as what we see as a professional individual practicing in that specific profession that they studied in our country, and they automatically qualify as members for PPS.
So PPS is the only mutual financial service provider in South Africa. What does that mean?
Well, as I mentioned earlier, the whole concept of mutuality it's pretty much an old concept, one in South Africa that a couple of companies did follow or belong to, but it's completely phased out now, and PPS is the only one remaining in South Africa that still offers that. What it basically means, being a mutually owned company, is that instead of having external shareholders like any other company in South Africa or in the world for that matter does, is when they start growing, they have external shareholders that put money into the company. They register, for instance, on the JSE. That money makes profits, and that profits get shared back to who? The guys that initially put in the money, so the shareholders. Now, at PPS, what mutuality means is we don't have external shareholders. The company's members, you as a client, actually own a part of the company. So your premiums that you pay, which, by the way, you're anyway going to pay sometime during your life for some kind of insurance or investment. So what we do as a mutually owned company, we give you a part of those shares, we invest it on your behalf, and at the age of retirement, say 60 or 65, or hopefully as medical technology is progressing, we're going to work much later than 65 in our lives. That money gets paid out to you, and very, very important, I'm going to say this slowly, tax-free as a lump sum. And there's no other thing almost in the country as an investment that can give you that advantage. So it's very important to remember that is the one thing that I want to hammer on. And if you take away nothing away from this interview, remember the mutuality thing. That basically every cent that you spend into the company, you buy shares into the company, and that money gets paid back to you at the end of your working life.
Well, I'm definitely going to remember that. So PPS provides cover for hazardous pursuits with no loaning or exclusions. How does that work? Which hazardous pursuits are you referring to?
It's an interesting concept, or an interesting fact that needs to be taken into account whenever you consider buying insurance or getting insurance, long-term insurance, life insurance from a company. There's a lot of exclusions sometimes, and it's not always that transparent. PPS, we obviously believe in an absolute transparent product. So what that means, covering hazardous pursuits, is we've also realized over the past 40 or so years that people with money, or professional people that make a little bit more money, hopefully, they like partaking in hazardous pursuits because they have that kind of money and maybe that drive inside of them to do these things. I'm referring to bungee jumping, skiing, skydiving, anything out of the ordinary that's not any regular activity. Now, what a lot of companies out there don't tell you is that they don't cover these things, because that obviously makes you a higher risk. So you have to pay a higher premium for that. So they won't tell you that in the beginning. Okay. And then, should something happen to you during this hazardous pursuit, they just say, "Sorry, that's not included in your policy." So at PPS, that is automatically included, as is traveling abroad, for instance. Another thing that gets loaded onto your premium at most companies. So if you don't tell them about that, they can pretty much just say that they're not going to pay you because you didn't specify that you do partake in these things. So we cover that automatically. Any hazardous pursuit, anything abroad, PPS, you're always covered.
Okay, so I have a bit of a personal question, though. As a student, should we be thinking about insurance this early on in our lives?
It's a very valid question, and I'm not exactly sure how old I sound, but I'm still, I've been at TUKS not so many years ago, and I don't like thinking about insurance. We, as young people, we think we're invincible, and there's a lot of other things that we like to spend our money on rather than something that you don't get back. As I mentioned, the whole grudge expenditure thing. But it is extremely important to at least familiarize yourself with these kinds of things. First of all, because it's still cheap. We're still relatively healthy.
Okay.
There's nothing particularly, hopefully, wrong that much with you that would be at 40 or 50 when you actually start realizing how important these things are. That first of all. Second of all, we refer to this as compound interest. So this money that I spoke about, the whole mutuality thing, that gets invested on your behalf, that grows over years, okay? And that interest earns interest. And over years, that interest keeps on earning interest on interest, and that's compound interest. And that can add up to a significant amount of money if you start at 25 up to the age of 65 versus starting at 35 up to the age of 65. That 10 years initial difference is a massive difference at the end of the day. So even if you start small, it sounds like these kinds of products are expensive that I've been explaining, but it starts at as little as 20 Rand a month or something. You can just start very small and have this investment in your own capacity start growing over the years. So yes, it's not nice to think about it, but I urge young people to start thinking about it. And I also do presentations for all the departments and all the faculties at TUKS. So if you haven't seen me in your fourth year, you probably will be seeing me for the remainder of this year. And there I also get the question a lot. Should you start thinking about these things? Is it necessary yet? And even if you don't think so, I definitely urge you to at least look into it and use your own logic to make the decision for yourself. So
thanks. Ending off, though, can we give a brief summary about what you do, who you are, just make everything very clear for the listeners?
Yes. So if I've lost you about 10 minutes ago, just before ISO. This is basically what you need to know. Start thinking about insurance. Start thinking about the thing that is most valuable to you in your life, which is what? Your ability to earn money. If you lose that, that is the one thing that you can't replace. even love. If you don't think so, you can replace it. That's the one thing that you can't replace should something happen to you. So start thinking about that. Plant that seed in your head. Then the next thing, as soon as you start thinking about spending money into these things, remember PPS. Remember the Professional Provident Society. If you're aiming for your 4-year or higher, or you already have your 4th or higher qualification, just talk to your financial advisor. Make sure he's an independent financial advisor and that he gives you advice of all of these companies and kind of compare that with PPS before you make your decision. And then remember, obviously, the hazardous pursuits thing that I mentioned. Make sure you also mention that to your financial advisor, and remember that PPS covers that automatically. Remember ProfMed, our medical aid. Everything is on the website, of course, pps.co.za. And then the mutuality concept, like I mentioned. No other company in South Africa does that. And if you don't want to start with that, at least use that concept to start investing as soon as possible. And that is the long and the short of it. So thank you very much.
Thank you so much for your time, Pierre. So as you can see, even if you are a student, you should be thinking about insurance. The earlier you start, the cheaper it will be.